In this class, we are solving Cambridge IGCSE question 1, May, June 2019. Remember, you can visit jadosconsulting.com to take the class that covers the topic we're solving. And then don't forget that you can always order for my study bag or my textbook, okay? You can reach me on the number displayed or pay into the account displayed as well. Quickly, we're looking at Cambridge IGCSE 2019 June question 1. So here I have Sabelo is a trader. His financial year ends on 30th April. He maintains a 3-column cash book and a petty cash book. The Imprest amount is $120. All payments under $90 are made from the petty cash. Sabelo had the following transactions in April 2019. So we have 2019, April 1, petty cash Imprest restored from the business bank account. April 3, paid Kenneth, a credit supplier, 58 naira. April 8, Elijah, a credit customer, paid his account $350 by bank transfer after deducting 2% cash discount. And then 11, paid for taxi fare, $14. April 15, bought stationery, $24. April 19, paid for office expenses by check, $150. April 24, paid for bus fare, $9. 27th, paid Ziningi, a credit supplier, $585 by check after deducting 2.5% cash discount. 28th, received a check for $100 from a tenant for rent. 29th, cash sales, $820, of which $800 was paid into the bank. And they said required, record these transactions in the following books, which appear on the next 2 pages. Balance the books and bring down the balances on 1st, May 2019. So we have petty cash book and 3-column. Basically, what is happening here is that Sabelo has a business, and for his business he maintains a petty cash book. The petty cash book is a book prepared, okay, or maintained for petty expenses. Now the threshold for petty expenses is determined from business to business. What is considered petty or minor for business A might not be petty or minor for business B, so we must understand that fact. But then because we are solving a question here, we must understand that Sabelo's business, the threshold is that anything that is under $90 is paid from the petty cash book. Any other one goes to the main cash book, which is 3-column cash book here. So we'll have to quickly prepare the cash book as required by the question for the business. So we'll do it simultaneously. But the good thing is that the question gave us a format. That's what IGCSE does. So they gave us a format, how they want the petty cash book to look like and how they want the 3-column cash book to look like. So we're following that format. So we have Sabelo. So we have petty cash book based on the format given. Petty cash book. So we have the first column there. Total received. Okay. The second column there, date. Okay. The next column there, details. Okay. The next column there, total paid. Okay. The next column there, we have travel. Then we have postage and stationery. Let's call it P and S. And then we have ledger. Okay, so this is the format given by the question. Okay, they are all in dollars. Okay, yeah. So okay, and then here we have 2019 April 1st. So let's say 1st of April 2019, based on the format given, we have balance brought down of $18 here, and then that is it for the petty cash book. Then let's see how the format is for the 3-column cash book. So we have Sabelo. So we have Sabelo, and then we're also working based on the format given to us by the question here. So what do we have? We have let's close this aspect. So let's say we have dates based on the format provided. Then we have details, okay, followed by discount allowed. So let's call it DA. Okay. Then we have cash and bank. We have cash. Then we have bank. Okay. Then the next one here we have date again. Okay. Then we have details, discount received based on the format given. Then we have what? Cash. Then we have what? Bank. Okay, so it's all in dollars here. Okay. So we can call this the credit, call this what? The debit. So this is the cash book. Okay, so let's do it this way. Okay, so remember, your petty cash book is for recording your petty expenses, and then your cash book here is for recording cash receipt and cash payments. Okay, but based on the question you already gave us, now we have some items in there based on the format given. I can see date here, April 1st. So we have April 1st here based on the format given. There's balance brought down there, cash of $250. And then on the credit side, that's April 1st. April 1st, there's a balance brought down here of $1119, bank $1119. So basically, from what I can see here, the business has some money in the cash, basically in the office, and then there's an overdraft here. Okay, so your bank typically should be an asset to the debit balance, but when you're having a credit balance, that's an overdraft. That's more like a liability. That means the business is owing the bank. So let's proceed based on the question. Okay, based on the question, the first one there said April 1st, petty cash Imprest restored from the business bank account. Remember that as a business, you're operating a petty cash. There's usually what we call fixed float. That is an amount of money that you give to whoever is operating the petty cash, also called the petty cashier, from which you spend out for petty expenses. And based on the business here, any item or any expense that is below $90 is spent out of the what? Petty cash book. Okay, any other one above that is okay recorded or spent out of the what? Out of the main cash book here. So now the first thing that they said, petty cash Imprest restored from the business bank account. If you look at your petty cash book here, you can see that there's a balance brought down of what? $18 here. Okay, and then the question said that the business maintains what? An Imprest of $120. So that means that, okay, what the petty cashier or whoever is operating the petty cash or keeping the petty cash has maximally, okay, is $120. So basically you can't have more than that. So at intervals as you spend, they'll be restoring what we call reimbursement. Okay, so you have an Imprest or a float. When you spend out of the float at a particular point in time, they will refund to you what you have spent. We call that reimbursement. So now they are saying April 1st, the petty cash Imprest restored from the business bank account. We were saying that we took money out of the bank and then we sent it to what? The petty cash. But the question is, how much was restored? Now we understand that the Imprest amount that is kept, which is the fixed float or the maximum float, is $120. And then, excuse me, the business is saying that what? As at the 1st of April here, there is $18 in the petty cash interest. So how much was restored? That will be what the fixed interest or the fixed float minus what we have here as the balance. So if you take $18 from 120, you have $102. That is the reimbursement. Okay, so we can say reimbursement on the 1st of what? April. Okay, so we have 1st of April 2019. So we have a reimbursement, okay, of how much? 102 naira. So if we add this, it will give you 120, which is the what? The float, okay, that the business or the interest that the business keeps, $120 okay. So out of this 120 now, you can now spend. But remember the clause, or remember the principle, or remember the policy of the business. Anything under $90 is what comes to what? Petty cash. So the next one there, April 3rd, paid Kenneth, a credit supplier, $58. $58 is less than $90, so it will come to the petty cash. So that's what 3rd of what? April. So we can say 3rd of what? April 2019. Okay. So we paid Kenneth. Okay. We paid Kenneth. How much was paid to Kenneth? $58. That's the total paid. Yes, $58 dollars. Kenneth will fall under what? Ledger. Okay. Traveling here is for travel or transportation. We have printing and stationery here, or posting and stationery here. Okay, and the next one there is ledger. So that will be under what? Ledger here of $58 dollars. Okay. The next one there, Elijah, a credit customer, paid his account of $350 by bank transfer after deducting 2% cash discount. Elijah is a supplier. Sorry, Elijah is a credit customer rather. Customers are like clients, those owning the business. So he's paying his account. That means he's paying Sabelo. So Sabelo there is going to receive an amount of money from what? From Elijah. Now remember your cash book. I've told you that your cash book, you can go to jadosconsulting.com to take classes on books of accounts. They are all there free of charge. So now your cash book, the credit side is for payments, the debit side is for what? Receipts. So when Sabelo is receiving cash or receiving money into his bank account, you debit his cash book. When he's paying out of cash or paying out of his bank account, you credit his what? Cash book. So here they said Elijah, a credit customer, paid his account of $350 by bank transfer after deducting 2% cash what? Discount. So that means he's receiving. And what's the date there? 8th of April. So we have April 8th. Okay, so this is what? Elijah. Okay, you can this April, you can write it in full on your own. So okay, so we have how much there? $350. So Elijah is paying $350, but they said after deducting 2% discount, 2% cash discount. So basically here, I don't want us to start interpreting it because in practice, basically you tell it's not that cumbersome. If you know, it's easy to say, okay, take out this discount and pay. Okay, so but under examination condition, we want to know, is the $350 after deducting the 2% or before deducting the 2%? So, but you know, let's make it a simple interpretation. So we're going to say that $350 here is what Elijah is owing, and then he's going to deduct 2% before paying the what? The balance. So let's quickly, okay, show that somewhere here. So we have 350, okay, times what? 2% is 2 over what? 100. Okay, so what do we have here? That's more like saying 0.02 times what? 350. Okay, you can use a calculator. 0.02, okay, times 350. Okay, that is 7 naira. Okay, So if you take 350, if you take 7 naira from 350, that will give you the amount that was transferred. So this 7 naira here is a discount allowed because Elijah is receiving it, but is taking out cash what discount. So sorry, Sabelo rather is receiving the cash but taking out what cash discount. So how much was actually received was transferred. It was a bank transfer, so that will actually go to the bank here. So we have 350 minus what 7, that will be 343. Okay, that's 343 received into the bank with a discount allowed of how much? $7. So basically, if you add $7 with $343, that will give you $350. Okay, so the next one there, 11, paid for taxi fare $14, that is below $90, so that will go to petty cash. So that's 11th there, 11th of April 2019. They paid for what? For taxi fare. So we have taxi. How much is that? $14. Total paid is what? $14. Under what? Analysis of expense. Yeah, that would be what? Travel. So we can save $14 here. The next one, 15, bus stationery $24. That's below $90. So that will go to petty cash. Put there. Date there is 15th. 15th of April 2019. Station marriage there. How much is that? We have $24. $24. Okay, and now we go to what? Postage and stationery here. We have $24. Okay, the next one, paid for office expense by check, and that is $115. That's above $90, so that will go to the cash book. Remember I said your credit side is for what? Is for payment, debit side is for what? Receipt. And here they are paying for what? Office expense by check. Okay, what's the day? The 19th of April. So we have April 19th. What was paid for their office expense? So we have office what? Expense. Okay, and that is how much? $115. Okay, and that is going to be how much there? 115 bank. $115. Now remember that this $102 here was transferred from where? From the bank account. So if it's coming to the petty cash, it must have left the what? The cash book. Okay, it left the question said that what? That petty cash Imprest restored from the business bank account on the 1st of what? April. Petty cash Imprest restored from the, that means that this 102 was taken from the bank. Okay, it was taken from the what? Bank. So we can as well assume that what? We withdrew from the what? Bank in form of payment before bringing it to where? To the petty cash book. So that means that on the 1st of April there was what? A payment. Okay, there was what? A payment. There was a payment April 1st. So we can say what? Petty cash of how much? 102. Okay, so let's move on to the other one there, which is office expense that we paid on the 19th now. So on the 19th we have office what? Expense of how much there? $115. Is that check or? Yes, by check. So that is 115. Okay, so the next one there, paid for bus fare $9.24. That's below $90. So that will go to petty cash. Date, what's the date there? 24th. So we have 24th of April 2019. Bus what? Fare. How much is that? $9. So that will go to what? Travels. Travels $9. Okay, the next one, paid Ziningi a credit supplier 585 by check after deducting 2.5% cash discount. So in this case now, we are the one paying, okay, but there's a discount of 2.5%, okay. So we're going to say what, 580 times what, 585 times what is there, 2.5%, that's 2.5 over 100, okay. So so we have okay, 2.5 divided by 100, okay, excuse me, 2.5 divided by 100, okay, multiplied by what, 585, okay, I can see 14.6 here, so we have 14.6. so if we take that from what, 585, okay, we have 570.4. so basically we can say 27th we have Ziningi, we paid him by check 570.4. then what happened, we gave, or we received a discount of, how much is that, 14.6, this kind of 14.6, okay. So what's the next one there? 28, received a check for 100 naira from a tenant for rent, that's cash receipt. So we have 28 rent, okay. This is not rental this is rental income. You know, when that we have two rents. You can have rent that you are occupying, you're paying for, or you can have rent that you are receiving from. At least you have the building, okay, or you have the space and then you give it out as for let. So in that case, it's a rental income. So that's what I'm talking about here. So we have received a check of $100 from a tenant for rent. So we have check here, $100 dollars. The next one there, cash sales, $820, of which $800 was paid into the bank. Okay, so we have 29. We have sales, okay, it's 820, okay, but they paid what, 800 to the bank. So we are going to have 20 naira here in cash, 800 naira in the what, bank. So I guess that is all. Okay, so let's balance the accounts here. Okay, so let's balance the cash. Petty Cashier have the total here. We have 58 here. We have 24. This is 20 what? 3. So you add everything here, it should give you total here. So we can have 58 plus 14 plus 24 plus 9, or 23 plus 24 plus what, 50. It should be the same thing. So let's check that out there. Okay, so 23 plus 24 plus 58. So I have 105. So this plus this plus this should give me 105. This plus this plus this should give me 105. So let me test it. 58 plus 14 plus 24 plus 9. That's 105. So what do we do? Let's balance up here. Remember, here we have 120. Here we have 105. So this is what has been what? Spent. Okay? This is what has been spent. Okay? And then we must balance the what? Petty cash. So that it will be reimbursed such that what? The interest will get back to what? It's what? 200. So the last date here, which is 30th of April, we can say 30th of April 2019. So we have what? Balance carried down. Okay, so what do we have here? This is 120. So we have 120. This is 105. We have 105. So that, okay, both sides becomes what? Equal. So here you have 225. Here you have 225. So that by 1st of what? May 2019, this will now be what? Balance brought down of 120. The assumption is that you are going to reimburse the petty cashier or whoever is in charge of the petty cash 105 to take the balance back to what? 120. So that's for the petty cash. So let's do that of what? The cash book. So it's going to be cash for debit against cash for credit, and then bank for debit against bank for what? Credit. So basically, like I said, there's nothing, no payment for cash here. So the last date, which is April 30th, we're going to have balance carried down. So this is already 270. So we have 270 here. Okay, so that okay, so that we have 270 here. We have 270 here. So that on the 1st of what? May 2019, we have balance brought down of what? 270 for cash. Okay, now for bank, what is total in the debit side? What is total in the what? Credit side. Okay, so let's quickly do that addition there. So for the credit side, we have 119, 102, 115, 570.4. Okay, and then for here we have 343, 100 and 800. Okay, so let's go. So the debit side is equal to what? 343 plus 100 is 434. Okay, sorry, 443. 343 plus 100, that's 443. Okay, plus what? 800. This is debit side is 1243. Okay, so what's the next one here? Here, what do you have? 1119. Okay, plus 102. Okay, plus 115. Okay, plus what? 570.4. So I have credit side to be 1906.4. So what's the difference? The balance carried down will be here because I can tell the credit side is higher than the debit side. So that will be what? April 30th. So we have balance carried down. The credit side is higher than the debit side. So total the credit side here will be 1906.4. So if you take out 1243 from it, okay, minus 1243, okay, that's what I can. What am I saying? I can see bank here to be 663.4. So what do we have here? 1906.4. So the balance brought down here will be what? 663.4. Okay, so let's so let's go there. Okay, excuse me. So that's it. So the next question there, he's saying that what? Sabelo's bank statement showed an overdraft of 1118 on 30th April 2019. He found out that the bank had not recorded the transaction entered in the bank column of the cash book on the following dates: April 19th, April 27th, April 28th, April 29th. That's why the bank statement showed a debit of 240. Okay, 240 for Sabelo's home insurance, which should have been debited to his personal bank account. Okay, so that means they said the answer what we should require prepare a bank reconciliation statement at 30th April 2019. So what are we doing here? We are preparing bank reconciliation bank reconciliation what? Statement. So how do we prepare bank reconciliation statement now? So they say we should prepare bank reconciliation statement as at 30th April 2019. So we have bank reconciliation statement as at 30th April 2019. Okay, so what do we, excuse me, so we have, let's say, bank reconciliation statement as at what? 30th April 2019. Okay, so we have Naira, and we have, oh sorry, dollars. Excuse me. So what do? We say balance as per cash book. This is a credit balance, so it's negative. So we have 663.4 negative. So what do? We say what? Add unpresented checks. So what are the unpresented checks? Unpresented checks are value items that appear on the credit side of the cash book but are not appearing on the debit side of the bank statement. Now, they are saying that he found out that the bank had not recorded transactions entered in the bank column of the cash book on the following date, April 19th. Where is April 19th? This is April 19th. Okay? This is office expense 115. Remember, I've already taught you that any item that is credited in the cash book is expected to be debited in the bank statement. So when you have an item credited in the cash book, okay, that is, if it is credited in the bank column of the cash book, it's expected to be debited in the debit of the bank statement. And where it is not debited, where in the bank statement, then it's an unpresented check. So here we have office expense of how much? 115. So the next item there, 27th of April. That 27th of April is in. Okay, so how much was paid out of the bank via the cash book? So we have 570.4. So we expect that should appear in the debit side of the bank statement. But they said it has not appeared, at least it was not recorded by the bank. So it's forming part of the unpresented check. So we have Zining of how much? 570.4. So what's the next one there? 28. Where's 28 there? 28 is on the debit side. You know, when an item appears on the debit side of the cash, it's going to appear on the credit side of the bank statement. And where this has not happened, we refer to it as uncredited check. So here we are going to treat that as an uncredited check. The next one there is 29th. 29th, we have sales. 29th here we have sales of 820, but we have 800 naira in the bank column, 20 naira in the cash column. So we expect that the 800 naira in the bank column should appear in the credit side of the bank statement, but they are saying that it was not recorded. So that is uncredited check. So we have two unpresented checks and two uncredited checks. So let's go. We add unpresented checks. What we have here, if we're adding, if you're adding 115 plus 570, so what do you have? Grab your calculator, please. So we have 115 plus 570.4. So I have 685.4. So we have 685.4. So what do we do? This is negative, this is positive. So we have more positive than negative here. So 685 positive minus 663. Okay? No, we are adding. You can say minus 663 plus 685.4. Recall your simple arithmetics, okay? So what do we do? The difference between negative 663.4 and the positive 685.4, okay? What do we have there? 22. So the next one, I will say what? Less uncredited check. I already explained that whatever is in the debit side of the cash book that is not recorded in the credit side of the bank statement, whatever is recorded in the debit side of the cash book that is not recorded in the credit side of the bank statement, okay, is what we refer to as uncredited what? Checks, okay? So, sorry. So now let's proceed. So what do we have there? We have 28. 28 here is rent, okay? So we have rent of how much? 100. And then we also have 29 here, sales of how much? 800. Sales of how much? So we have 900 here. So 900. So when you take out 900 from 22, what do you have? You have negative 878. So the next item that they say the bank statement showed a debit of 240 for Sabelo's home insurance, which should have been debited to his personal account. So now that means that they've debited the bank statement in error. The business is having a debit of 240, which ought to be debited to Sabelo's account. Okay, so technically, assuming that it was supposed to be debited to the business account, we ought to have credited it to our what? Cash, which would have been what? A deduction from the what? Cash balance that we are using. Okay, so but then because it's a reconciliation item that will be corrected in the following month, so let's just assume that we have a debit in the business bank statement that should be credited in the what? Cash book. Okay, so let's pick it up as a reconciliation item in the bank reconciliation what? Statement. So we'll say what? Mr. or let's say less Sabelo's what? Debits. Okay? Okay? So what's the Sabelo's debit now? Sabelo's debit that ought to have gone to Sabelo but entered into the bank statement. So we have $240. So we have $240. So what does that give to you? So negative 878, okay, with another negative what? 240. Okay, so what do you have there? You have negative 1118, which is what the bank statement of the business is showing. Sabelo's bank statement showed an overdraft of 1118 on 30th April 2019. So we can just call this balance as per bank statement. Okay, so that's it. So the next question. Okay, the next question says, advise Sabelo whether each of the following will affect his financial statement for the year ended 30th April 2019. Give reasons for your answer. The first one said, received an order for goods to be supplied in May 2019. Affecting the financial statement, yes or no? Okay, what's an order? An order is like an instruction to supply, or an intention to what? To buy. So there's no commitment. If I'm telling you to supply me, okay, I'm telling you supply me so unit of products, that does not mean that I've accepted the liability. It's just an order, what sometimes we refer to as LPO, local purchase order. I'm telling you to supply me so item, okay? So that's why I find that I've given you an instruction. That does not mean that I've accepted the liability yet because you have not yet supplied. No, they're telling me now that the business, which is Sabelo, received an order to supply product in May. And remember, we are reporting April. Now they're asking you, will it affect the financial statement? Okay, the answer is no. Why? Because it is just an order. Okay, it's just an order. There's no commitment here. There's no what they call a justifiable evidence, okay, or a probable fact that the economic benefit of that supply will flow to the business at the point of what? Reporting. So in that case, we cannot recognize that revenue, okay, by virtue of IAS 18, okay, our revenue recognition with reference to sale of what? Goods. Okay, but another approach is what we call the fact that we cannot recognize such revenue because that don't been realized. Accounting concept and what? And convention. Okay, it is just an order, and there's no liability that has been passed to the what? To the client yet. So there's no way we should record that in the what? Financial statements at the time of what? Reporting. This is from what? An accounting perspective. Of course, we want to discuss it from a marketing perspective. That's the result. So, but then let's just face the question. That's it. No, it will not affect it by virtue of accounting concept and convention or international accounting standard 18, revenue recognition with reference to sale of what? Goods. The next one there say 2. Business decided to close the if the business, if Sabelo decided to close the business with effect from 31st May 2019, will it affect the what? Financial statement? Okay. Now they are telling you that that same order that was received to be supplied in May, if the business is closing by 31st of 2019, that you want to close the business, will it still affect the financial statement? Well, so long as we can prove that, or from the question, we can say that the product will be supplied in May, and the period of closing is 31st of what? May. So long as it has been supplied, it will affect the what? The financial statement. So we have to recognize the revenue, credit sales, debit the what? The debtor, which is the customer or the client, and then when the customer pays, okay, or maybe upon dissolution, okay, depending on the perspective you're looking at it from, what do? You credit the customer when the customer pays and debit your what? Your cash, okay, to be utilized based on what the decision of the what? Business what? Owner. So that is basically what we are looking at there. Okay, so the question is testing your understanding of probably accounting concept and conventions, and I want to believe they are not really looking at IAS here, but then just for your knowledge, okay, you can as well use your IAS to back up that your the first question there. Okay, so that is it. This is a question on IGCSE June 2019 question 1. Okay, it tested simultaneous preparation of 3-column cash book and petty cash book. It also tested the going concern of a business in terms of preparing bank reconciliation statement as well, and then tested end of year adjustment with reference to what? Accounting concept and what? Convention. So we're also able to identify an element of IAS 18 there, just for your knowledge. So if you have questions, you can reach me on the numbers displayed on the screen or drop questions in the comment section. I'll be there to reply with the right answers. Thank you.